So guys, you're welcome to my YouTube channel again. I remember the first video I dropped a video on market structure, but I was able to complete it because of my time. It was just, I think, a 10-minute video. I was trying to explain the basic market structure for those who are joining my YouTube who are beginners, who want to learn the Forex or how to trade the Forex market. So I'll just quickly give like I said in the first video, there's a strategy I trade. It's called SLK, Structural Liquidity Key Level. And I'm going to be teaching that strategy here on my YouTube for those who want to trade that same strategy. Like I said, subsequently I'll be posting some of my results as time goes on. But I can assure you that this strategy is very profitable. At least 70% win rate. But I'm not the market maker. The market can decide to do what it wants to do. Alright, so in my last video I explained that we have two types of market structure. We have the trending market structure, we have the arranging market structure. Another trending market structure, they are divided into two. We have the higher ends, the uptrend market structure, the downtrend market structure. Those are the two types of trending market structure. We have in the last video I explained the uptrend market structure. Today I will explain the downtrend market structure. I don't think I completed in the last video. The downtrend market structure. The word down simply means the market is going down. It's another word for it is bearish. That means the market is selling. When we say market is in a downtrend, simply means we have buyers largely in that market. Alright, downtrend market structure. Now I said in my first video that the market doesn't move in a straight line, that the market moves in a zigzag manner. Doesn't move like this, no. The market moves in a zigzag manner. It does not move in a straight line. It goes like this, moves like this, goes like this. Moves in a zigzag manner. If you check your chart, if you are new to Forex, you can do what to download MetaTrader on your MetaTrader 4 or 5. You can go for 5. 5 is the latest version, and that's what most traders use. You can go for 5. But when you look at the chart on your MetaTrader or trading view, you notice the chart is not in a straight line manner, in a zigzag manner. And so the market moves in that form. So for a downtrend, you must pay attention to these two terms. It's called lower high and lower low. Pay attention to these two terms. Lower high. So pay attention to these two terminologies. Lower high. Like I said, for the uptrend, we have higher high and higher low. But for the downtrend, we have what we call lower high and lower low. And whenever you are trading the downtrend market, you must identify these two things. You will be able to see them on the chart for you to now see the market is in a downtrend. Now, how does a downtrend market look like? It will be going down. Go up small, go down. Go up, go down. Go up, go down. Go up, go down. This is what we call a downtrend market structure. Now remember what I said, lower high and lower low. They are in this schematic diagram I just drew. Lower high and lower low. Now where is the lower high? This is called the lower high. This high here is always called the lower high. I represent it as LL. It's always called the lower high, and this low here is always called the lower low. Another word for this is structural point. I don't think I remember seeing it in the last video for the uptrend. I'm not sure I remember saying it. But it's called lower low or structural point. We also have structural point for the uptrend. This is called lower low. Oh, sorry, this was a mistake. That is not lower, that is lower high. Lower high. So anytime a market breaks the lower low, it is called a break of structure. That's why we call it lower low or structural point. Let me type it here for you. I'm already moving into structural point. Lower low, lower low is also called a structural point. It's also called a structural point. Now, let me write on that. Anytime price takes out the lower low or structural point, it is called a break of structure. This information I'm giving is a premium information, trust me. A lot of people don't know why we call it break of structure, and it's because of this name. It is anytime price takes out the lower low, which is this one, it is called a break of structure to the downside. So when I tell you a break of structures are called in a market, is because price has already taken out the structural point. For the uptrend, the higher high is called the structural point. When I get to liquidity, I'll teach you what we call internal range liquidity and external range liquidity, so you understand better. But just understand for the downtrend, anytime price takes out the lower low, it is called a break of structure. So price, for a market to be in an uptrend, price will keep taking out the previous lower low, and to keep expecting the previous lower high. Exactly, to keep expecting the previous lower high. In other words, price will not go and take out this previous lower high, so you expect it will not go above it. The moment it goes above it is signaling a change of character or a change of structure. When I get there, I'm going to show you. Just you don't have to rush it. Just be patient. Forex does not require. I can assure you that technical analysis is the very simple part of Forex. You can all of these things I'm teaching you in 1 week. If I drop all of the videos and you study it, you definitely get what I'm teaching. Alright. So this is what we call the downtrend market. Pay attention. You must always be able to identify your lower high and your lower low. And your lower low is also called the structural point. And anytime price takes out the lower low or structural point, it's called a break of structure. There's no K in this. It is called a break of structure. Alright, I'm definitely sure you are gaining value through this YouTube channel. Please do want to share the links to your friends and let's make money together. I'm going to be giving you 100% study on how I trade my LCLK strategy. If you want to join my mentorship group, you can reach out to me in the Telegram channel and then I will add you. Those ones, I have the privilege to hold them by the hand to teach them or on how to go about this Forex journey. But here on YouTube, I'll just join free video and then be doing the studies yourself. Well, it's a matter of your choice. Alright, so that's that for downtrend market. And the last market structure we have is the ranging market structure. Ranging market structure. Alright, from the word range, it just means the market is ranging. And when we say the market is ranging, it definitely means the market is not giving an actual direction. Since the market does not move in a straight line, the ranging market is just like this. Market goes up, comes down, goes up, comes down, goes up, comes down. It's not giving us whether it is going bearish or it is going bullish. Remember, if it is going bullish, it must give you higher high and higher low. If it is going bearish, it must create higher lower highs and lower lows. But in a ranging market, it does not do any of that. Just keep ranging. It will go up, it will come down, go up, come down. Something like this. It's not really giving you a good movement for you to determine the bias of the market or the trend of the market. So when you see something like this, it's always advisable never to trade a ranging market. Never trade a ranging market. It's always good to always go in the direction of the market, because you are not a market maker. I'm not a market maker. We are all trying to take advantage of what the market is doing. And basically, one of the good things about trading the SLK strategy is that you're not predicting, you are reacting to what the market is doing. A lot of people like to predict, and I've been in that kind of situation before. Just come to your channel like, price is going to buy today. No, price can be showing it wants to buy, but that does not enough reason to buy. You must learn to react to what the market is doing. You are not the one controlling the market. You have world banks, a lot of people controlling the market. Your $1,000, $10,000 is not enough to control the market. So what you are doing is reacting with the market. You are going in direction of those controlling the market. You are going in that direction. So a ranging market is not advisable to be traded, and that's why you see most traders don't really talk about it, because it's not that useful. It's just that we need to just let you know that there is a particular thing the market to be ranging. It will not be going up, it will not be coming down. In those kind of time, you have to exercise patience and wait for a clear direction so as to know what to do. So these are the two types of market structure we have. The trending market structure, which comprises of the uptrend and the downtrend, and we also have the ranging market structure. This is what we call the basic market structure. Trust me, if you understand the basic market structure, it will be so easy to trade the SLK strategy, structured liquidity and key level. The algo market structure, algo simply means the advanced market structure, is not really needed in trading the SLK strategy. And if you want to learn, you can go ahead and learn. But for me, I'm not teaching it on this YouTube channel because I don't think it's basically needed. Alright, so that brings us to the end of this class. Do well to watch it and enjoy. In my next video, I will drop videos on key levels. Remember, I'm trading structure, liquidity, and key levels. I hope you enjoyed the class. Thank you.